Hello there. I got a new Investor Place mug this weekend. Hi everybody. My name is Jonathan Rose, and today I'm going to do something that we haven't done in the past 2 years of me on MIT Live. What I'm going to do today is I'm going to give you a prediction of exactly where I think the market's going to go in 4 months. I think the Fed is playing shenanigans behind the scenes, and I did a whole bunch of work this weekend to try to decipher exactly what the Fed is doing. Now I have a pretty strong opinion, and I'm going to walk you through exactly my thoughts on what the Fed is doing. What they're doing overall is they are supporting the front end of the yield curve. I'm going to show you exactly what that means and exactly how that affects the market. If we do have any connections, hang on. We'll be right back, but so far so good as far as the connections. Hello, everybody. I know I got an Investor Place mug this past weekend for the holiday party. I also got a couple of t-shirts. Whoa. All right, let's get into it. This is going to be a cool presentation, hopefully. All right, guys, here it is. Right now, the Fed is buying billions of dollars in T-bills. What they don't want you to do is they don't want you to call it quantitative easing, because right now, what's going on is quantitative tightening. But I think it's a lot closer to quantitative easing. So I'm going to walk you through that. What we're going to cover on this presentation, guys, I did a whole bunch of research. I want you to sit through this, okay? Why it feels bearish right now. I'm going to walk you through what the RRP is, reverse repo facility, why the Fed stepped in, why stocks are going to stay strong, and then to how to track our risk. Okay, why this feels bearish, why the market is selling off. That instinct is reasonable, but it's incomplete. Trillions were parked at the Fed. That trillions left the Fed, but the context matters. I'm going to show you exactly where it went. Slow down. This is what we need to pay attention to. This is the Fed's reverse repo facility going back to 2021. Near the peak, there was $2.5 trillion that were parked in the reverse repo facility. All of that money, all of that cushion, it is gone. No more cushion. Wouldn't that think you were bearish? Not necessarily. Let me explain further. Let me explain what the RRP actually was. What this is, it was parked institutional cash. This money was parked at the Fed. The key is it's not circulating. All that liquidity was taken out of the stock market. So it wasn't there to support markets. And then I added here, it's a shock absorber. It wasn't fuel. So that shock absorber for the overall market is now gone. And again, here's what that reverse repo facility looks like. Okay, cushion gone. All that money is gone. So why this matters. New issuance in 2026, the Fed has come out and said they are going to be buying 240 to 300 billion at the front end of the yield curve. Now, why this is important is net issuance is only between 400 and 450 billion. The Fed is committing right now that they will buy almost 70% of all new issuance in the front end of the yield curve. They are buyers. Eddie, I got you. I got you. This is just math, guys. This is true. Fed has said they will be buying this much. Only this much is going to be issued. So what's going to happen? They're going to pin the front end of the yield curve. With this, I'm going to do something that I don't usually do. I'm going to do my best to predict the future. And I want to predict the future a little bit just to give you guys some feeling of where I think the market's going to go. I think regardless that the market is selling off right now. Who cares about today? I think what this is extremely, extremely bullish. Here's what I think is going to happen. Let me get you the rates right now, so you can see what kind of moves to expect. Get a new window here. Fed.gov. Let's look at the data here. I'm just at fed.gov. I want to come down here to selected interest rates. And then we can look at what the rates are doing right now compared to where I think that they're going to go. 10-year. The 10-year right now, 4.14, actually, still 4.14. I think it goes to 4.35. That's not a lot of movement. Where I do think there's going to be a lot of movement is in the back end of the yield curve. 5.05, the 20 years at 4.75. The 30-year, 5.15. Right now it's at 4.79. So that's what I think right now. I think this is going to move just a little bit. These are going to move huge. What this is called, where can I get my pen? What this is called is a back end steepener. For my bond traders out there. But also, my prediction for the indices is right here. Okay, I worked on this all weekend, guys. I have 5+ hours studying this, and what I'm doing now is I'm just sharing my findings with all of you. If I look at the QQQs, where are we at? Well, let's go to the SPY first. SPY, 681. I think by April 1st, we're going to see SPY 770. Okay, bullish. 770. QQQ, 735. We're at 613 last. I think we are going to rally like it's nobody's business. But again, why? Because the Fed is fucking around. It should be QT, but they come out and say they're going to buy 70% of new issuance. That's not QT. That's QE. They're putting money back in the system. They're adding liquidity. It's extremely, extremely bullish. IWM, not as bullish as the others. IWM a little bit, but I think risk assets, QQQ, will go much higher into April 1st, 2026. I want to show you what to look for. What would make me think that this is not true? Great question. Let me share. Forget the carry trade. It's just a buzzword. Let's talk about this. Okay? Going over the carry trade is a 2-hour presentation. So moves a little bit. These are going to move a lot. This is a back end steepener. Okay? Equities going to go up a lot. Bond traders, for those who do follow bonds, these are the back end spreads. These are all going higher. I think all these spreads in the back end are going to go way, way up here. The difference between 10s and 30s is going to get drastically more pronounced. So what turns this bearish, guys? Henry, I'm not presenting about the yen right now. Can you? Okay. I'm not presenting about the yen. I've got no prediction on the yen, my guy. Okay? Not what I'm presenting on. What should we look at to turn bearish? The move index, guys. This is what's going to matter. In order for my play to play out, this move index is going to stay offered. I'm going to show you exactly how to follow that. That is going to be paramount going into the new year. Because what is the MOVE index? Are you guys familiar with the MOVE index? The MOVE index is the VIX of the bond market. Here's what it looks like going back to 2004. 2009, funding stress. 2022, funding stress. Okay? Bond volatility is being sucked out of the market. When bond volatility gets sucked out of the market, where do you think equities are going? They're going higher. The risk that I want you to watch, and I'm using Thinkorswim right here, you can just put in MOVE. And hopefully, there you go. MOVE. It's this. It's ICE BOFA MOVE Index. Here's what it looks like. It is offered. There is not a lot of volatility in bonds because the Fed is gobbling up 70% of that front end. Okay? I feel confident about this trade. I gave you guys a big boy institutional analysis backed by reasoning and exactly what you need to watch for this entire thesis to flip. One more thing, and we talk about this in our Discord, guys. When you're watching something like the MOVE, or if you're watching something like the VVIX, VVIX is the risk of the VIX, the VIX of the VIX. Watch speed. You want speed. It's not just the levels, it's the velocity of the movement. It's the power behind those moves. So that's it. Watch your MOVE, watch your VVIX. I am extremely bullish. The QQQ going into April 1st. And hold me accountable, guys. These are right here for everybody. Take a picture. Let's go back, and April 1st of 2026, we'll talk about this. I'll pull up this exact slide, and we'll see what I got right and what I got wrong. What I always do now, guys, is this is our free portion. I'm on here 11 a.m. every day the market's open, and then I bounce off to our all access portion. Those are the ones that we get all of our trades. That's the inside of the Discord, and that's what I'm going to do right now. Kim, thank you very much. That is very, very sweet of you guys. I do think, watch that 30-year. 30-year yields are going to go higher. Prices of TLT will go lower. Okay, Eddie, I love that trade. All right, guys, everybody in all access, you guys hang tight. Everybody else, thanks so much for watching. Give a thumbs up, subscribe, say some nice things in the comments. Thank you, guys. Hey everybody, I'm hopping back on for all access. Crossing my fingers that the connection's good for you guys and I can just hop in my Discord and everybody is ready and waiting. So let's see what we got. I like that analysis, guys. It just doesn't make sense to me why the Fed was buying so much in the front